Okay, so this is Silvana testing the English channel. 1, 2, 3, 4, 5, 6. Raul, I hope that you can hear me okay. Okay, great. So I'm going to switch over to
Este evento contará con una plataforma dedicada a la transmisión en vivo. Entrando a la página web del evento, eventos.flar.net, podrá encontrar los auditorios de las sesiones en vivo. Una vez en el auditorio, podrá ver la sesión en vivo, participar en el chat y ver información de la sesión, así como la biografía de los conferencistas. Si tiene dudas sobre la usabilidad de la plataforma, puede escribir un correo a comunicaciones@flar.net.
Good morning, afternoon, evening to all of you. My name is Iker Zubizarreta and I am FLAR's Chief Financial Officer. Once again, many thanks for your participation in this final day of our conference. I wanted to thank you all for joining us over the last 2 weeks. I present to you Dr. Fidel Jaramillo, Secretary General of FLAR, who will lead this session. Fidel, the floor is yours.
Thank you very much, Iker. Welcome to our last day of the 35th FLAR's annual conference on central banks and official institutions, better known as Cartagena Talks. I'm Fidel Jaramillo, Secretary General of the Latin American Reserve Fund, FLAR, and I will be your host for this fascinating discussion of the future of central banking and the role of innovation. I'm truly honored to present our next guest speaker, Mr. Benoit Couret, head of the BIS Innovation Hub and member of the BIS Executives Committee. He previously served on the ECB's executive board and worked at the French Treasury and at the French Debt Management Office in a variety of capacities, including co-chairing the Paris Club. He has authored articles and books on economic policy, international monetary system, the economics of European integration, technology, and innovation. As you can see, Benoit's academic and professional record is really impressive. He's a graduate at École Polytechnique in Paris, holds an advanced degree in statistics and economic policy from ENSAI, and has a bachelor's degree in Japanese. Irashaimasi, Benoit-san. And that's as far as I can go with my Japanese. Welcome, Benoit, to this special post-pandemic edition of FLAR's Cartagena Talks. How are you doing today?
I'm very well, Fidel, and thank you very much for inviting me to the Cartagena Talks. I'm very honored and glad to be here to chat with you and with your members and colleagues.
Thank you, Benoit. You are a banker. You live in Basel, so you may be considered as a Swiss banker. And that's a paradigm of being very serious, conservative, and risk-averse. With that in mind, how come you became a worldwide champion of financial innovation?
That's an interesting question. I'm actually not a Swiss banker. The BIS is an international organization with a broad membership, and we're working for the whole world. And my personal background is very much as a European civil servant, if you want, at first in France and then at the ECB. I spent 8 years at the ECB in Frankfurt, dealing a lot with European matters and with market operations, like implementing QE for the ECB. But increasingly, I got to understand that technology was key in the way we understand financial markets, in the way we can prepare for the future, and particularly when it comes to market infrastructures. And as a matter of fact, when I was at the ECB, I had the honor to chair the BIS Committee for Payments and Market Infrastructures for 6 years. And I could see how the focus of our membership, the focus of the international community gradually shifted towards innovation in payments and in financial infrastructures, starting from, understanding crypto, understanding what was going on in the crypto world, and then understanding stable coins, understanding the risks and opportunities created by tokenization, and so on and so forth. So to put it very simply, I got to understand as a central banker that technology can improve a lot the way central banks are serving their communities, but it also has the potential to disrupt central banking very much. And that's now what I want at the BIS, we want to support the central banking community in addressing these challenges.
Many thanks, Benoit, for your very interesting and personal perspective. Precisely today, we're going to discuss a variety of issues around 3 main topics. First, the evolving role of central banks. Second, technology and innovation in money and finance. And thirdly, your experience and work at the BIS Innovation Hub. Let me begin highlighting that during this conference, we have touched on issues that go beyond the classical agenda of central bankers that traditionally has been focused around payment systems and monetary and financial stability. For the last couple of weeks, we have been discussing issues like demographics, technology, digital money, decentralized finance, climate change, geopolitics, and others. What can central banks do to face this new agenda?
So central banks are operating in a world that is changing very fastly. So the nature of the challenges is facing. I would, in your long list, I would single out one, I think, overarching or key challenge, which is climate change, which has a potential to change everything around us and will really shape the economy, the financial system, and also the political goals of governments and public institutions. So climate change is an issue of its own, but it's true that the challenges are all around us. Now, that said, I would take a conservative approach to your question, Fidel, and I very much believe that central banks have to remain humble and modest in understanding what they can do and what they cannot do. Their key mandate remains monetary stability and financial stability. We have to adapt to a changing world, and in some cases, we'll have to find new instruments to deliver monetary stability and financial stability, particularly in a digital world. And I'm sure we can go deeper into that discussion. But central banks can't do everything. And if you take climate change, for instance, central banks can support collective action for climate. They cannot substitute collective action for climate. So we've got to keep a degree of humility in that discussion.
In that sense, there are some critics that are warning that this new agenda may distract central bank attention from their main mandate. What is your view on that criticism?
Well, in some cases, it may be the case, but in other cases, some of the challenges you've outlined, including climate change, can add to the to financial stability concerns, and they can add to monetary concerns. And clearly, if you look at the way central banks around the world have been addressing climate change, financial stability has been the primary angle so far. This has been a lot about, scenario-based analysis, understanding the impact of stranded assets on financial stability, understanding the impact of physical risks on financial stability, and drawing consequences both from a prudential standpoint and from a monetary standpoint. So in many cases, it's the same discussion. It's only that the nature of the threat is changing. The nature of the risk is changing.
That sounds very reasonable. In the past, environmental and climate change issues were something that only Ministry of Environment were seeing. And now I think that societies are convincing themselves that it's transversal to all of the members, including, of course, central banks in their capacities, of course. Two of our previous sessions dealt with closely related topics such as decentralized finance and the future of money. So how does the BIS see this future? Where are the opportunities? Where are the risks?
So if you allow me, I would like to take a step back and maybe start by very much stressing that the nature of or the stakes go beyond money and payments, and we see technology around us disrupting central bank activities in many ways, and money and payments are one of them. I would probably the most important of them, and that's about new private means of payment emerging. That's about crypto attempting to substitute money for payment purpose, or as units of as stores of value, or as units of accounts. And they've mostly failed in doing that. They've mostly they are mostly used today as investment, not as means of payments, and certainly not as units of accounts anywhere. So the main challenge doesn't come from crypto, but the nature of the challenge has emerged, and we've seen stable coins also challenging sovereign money, and increasingly we're seeing digital assets and more generally decentralized finance challenging the way financial intermediation is being organized and the way financial services are being delivered. So that's one big chunk of issues that central bankers have to address. But I would like to mention that there are other issues that we also need to address. There are enormous challenges in bank supervision, with the banks using big data, using algorithms, using machine learning to provide credit, to and in many ways to substitute, collateral as the way to back the credit of the loans they are extending, and substituting collateral with a better use of big data, better understanding of client profiles, and a lot of data analytics. And that changes a lot the way bank supervisors have to address banking risk. So that's one thing. And then there are also things happening in the field of financial markets, changing market structures, high frequency trading, algorithms being used at a very high frequency, and looking forward also possible tokenization of assets that may change the way capital markets work. And that also can disrupt the way central banks are doing monetary policy and implementing monetary policy. So what I'm saying here is that you have this very vast range of challenges where there is value in joining forces and investing together rather than each and every central bank doing experiments or investing and hiring specialists for themselves. So there is value in joining forces, putting our heads together and thinking together about the future challenges. And there is also value in making sure that anything we do to address these challenges will be consistent, because there is a big risk of fragmentation here. The global financial system is already pretty fragmented. That's already an issue. We don't want technology to add to the fragmentation. And technology increasingly is becoming a political discussion. I mean, you see technological wars between big powers. You see a lot of mistrust between governments when it comes to technology. And if that is going to contaminate the way central banks and financial regulators are working together, this will add to the fragmentation. So you need a safe place where central bankers, bank supervisors, financial authorities can gather and discuss technological challenges in a way that preserves the functioning of the global financial system. And the BIS is one such place. We always had a convening role to help central banks work together globally. And we want to keep that convening role and adapt it to new challenges, including technological challenges. Hence the creation of the BIS Innovation Hub.
Great. In the same direction, you have stated that central banks and institutions like a BIS should provide basic public goods in the financial area, like basic infrastructure that will foster innovation at the private sector level. What type of public goods are you referring? What type of public goods are needed for this type of innovation?
So there are different functions here. One big aspect of that conversation is not in the innovation hub and its regulation. We need cooperation on how to regulate stable coins, how to regulate crypto, how to adapt the principles for financial market infrastructures, or how to implement them, and so and how to implement the BCBS principles when it comes to crypto and new technologies. That is very important, and that takes place in BIS committees. So primarily the BCBS, the Basel Committee on Banking Supervision, and the CPMI, the Committee on Payments and Market Infrastructures. What the innovation does is slightly different. We are a laboratory. We produce prototypes. We are not a think tank. We don't do research. We do prototypes to test technological assumptions and to compare technologies to support central bank action. So typically, just to give you an example, what we do, let me give you a practical example. We know that improving cross-border payments is a global priority. The G20 has elevated this priority to a key as a key objective, and we now have a G20 action plan on enhancing cross-border payments. So what the BIS Innovation Hub can do is compare technological solutions. So we currently have 3 prototypes, one in Hong Kong, one in Singapore, one in Switzerland, to compare different ways to connect central bank digital currency platforms and to exchange multiple CBDCs, multiple central bank digital currencies, on a single platform as a way to ensure interoperability between CBDC environments. And so we can compare different approaches, different solutions. We have a similar approach when it comes to traditional payments. So we have this project called Nexus, based in Singapore, where we are building a prototype platform to connect fast payment systems. If that works, that has enormous potential in all regions, including, of course, in Latin America. To make cross-border payments cheaper and faster. But it also enables us to compare CBDC-based solutions with RTGS-based solutions, solutions based on traditional payment systems. And so our job is to try all that. We build the proof of concept, we build the prototype, we share our experience with the central banking community, and we report back, and we can come back to central bank governors and tell them, look, we've tried this works, solution X works better than solution Y. Solution Z doesn't work, or maybe it works, but it's going to be very expensive, and so on and so forth. That's something that each and every central bank should do for themselves, of course, but by joining forces, we can accelerate the process and support the global community.
Well, we'll get back into more detail on the Innovation Hub, which is a very unique experience. For the time being, we are receiving some questions from our audience, and I think before going to our next question, it is timely to address one. It says that, please would you explain to us the difference between privately generated cryptocurrencies or stable coins and central bank digital currencies?
That's a very important question, of course. I think the starting point of the discussion should be that we need a coexistence of different means of payments, some of them private, some of them public. I mean, today in any country, 90% or more than 90% of money is commercial money, right? When you go to the if you go to the bar tonight and you buy a beer, most likely you're going to pay with a credit card or with your smartphone, and that's money that's going to come from your bank account. That's private money. It's not public money, unless you pay with a banknote, and then it is public money. So there are different ways to pay for the same thing, and it's good that consumers have a choice, and it's good that we have a payment ecosystem, because consumers, citizens should have the choice of their means of payment, and also because diversity, competition is good for innovation. So we want to keep that force of innovation, which is a market-based competition. So there is no suggestion anywhere that central bank money should replace private initiative and private means of payments, but there is a risk that given all the propositions that we see everywhere when it comes to new means of payments, and particularly with the development of stable coins, which have the potential to scale up very quickly. Some of the stable coins propositions have been linked to very large social networks, and they have the potential to scale up very, 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 very fast. And so the question that central bankers are asking themselves is not, how can we suppress that? I don't think they should. But the question is, what if at some point there is no central bank money anymore? What if citizens are not using money that is issued by the central bank? And that's a matter of concern for central bankers for two reasons. First, we would lose the direct contact between citizens and the central bank, which I think matters for trust in the currency. I mean, when you're using a banknote, you can see the signature of, depending on the countries, either the governor or the finance minister, and that gives you trust in money being backed by, by the government, by society, by collectivity, and that's something that people could want to keep. And in a digital world, there is a risk that it would disappear. So that's the first thing, keeping that direct contact. And second thing, central bank money is key to financial stability, because if anything bad happens in the system, you want the central bank to be able to step in and act as lender of last resort. And that's not a theoretical consideration. That's something that all central banks have been doing in the great financial crisis. And again, last year, facing the pandemic, you want central bank money to be accessible as a way to stabilize the system. And so you need central banks want to keep that instrument, which is that ability to provide liquidity to the system in case anything bad happens. Hence the discussion on central bank digital currency. But again, I very much see the future as an ecosystem with central bank issued currency at the heart of it, at the center of it, or as the cornerstone of the system. and then a rich ecosystem of different private solutions, building and benefiting from the stability provided by central bank money.
And do you see any other competitive advantage of CBDCs beyond the fact that they can be used as an instrument of monetary policy and lender of last resort?
Yeah, there is an added advantage of central bank digital currency, which is that it is neutral. It is commercially neutral. So if you put central bank digital currency at the center of the system, there is no commercial interest. There will be no attempt to to keep the client to capture the client in a closed environment where you can also provide all kinds of financial services, which is what providers of private money will do. And for a good reason. If you are for profit, if you're providing a means of payment, you want that to be tied with commercial offers. You want to make money out of it. And there is nothing wrong with that if you are a for-profit institution. But the risk here is to create ecosystems which will be walled gardens where clients will be captured by in a closed environment. And so the value of central bank digital currency here is that it can be the basis for an open system with an open finance philosophy. So open entry, free entry, data being controlled by customers and competition all around. And I think that that's the right way to address the new system. And then, of course, private solutions can come in, but you want the basis to be neutral. You want it to be open and competitive.
If CBDCs are seen as a more safe and less riskier means of payments, where do you see the risk of currency substitutions in countries that are not issuing reserve money, especially the Latin American countries and other emerging countries?
So it is a matter of concern, and certainly the IMF in particular is working on this, and regional institutions I think should be looking into it, because I see it as a material concern for smaller open economies, that if you have a big digital currency around, so imagine a world where you have a digital euro, you have a digital dollar, dollarization will become even easier and faster. And so that it makes again the point that you need international coordination around CBDC, because you want the IMF to be able to step in and say, look, if you want to protect monetary sovereignty, these are the safeguards that you want to see. Incidentally, it's another reason for smaller economies to actually have a CBDC, because in case anything, in case of in case of a confidence issue in the global economy, if citizens become, or financial institutions become risk adverse, you certainly would prefer them to shift from bank deposits to your own CBDC issued by the local central banks under national law, rather than to have all of them shift to the digital dollar or the digital euro. So it's an argument for having a CBDC, that it kind of protects you in case of high risk aversion in the system.
Great. Let's move a little bit into the world of decentralized finance, because it has been seen as a promise for financial inclusion and more efficiency in the traditional financial systems. How do you see the outlook of decentralized finance?
Look, it's very hard to see, because it's evolving very fast, and which is good. It's good. It's a place with very vibrant innovation, which is overall very good. And then at some point there will be some kind of, I would expect some kind of consolidation, also because at some point regulation will kick in. And in many of the use cases of decentralized finance today have to do with lack of regulation, to be honest. That is lack of lack of financial regulation, or even worse, lack of enforcement of anti-money laundering or counterterrorism standards. And that is not right. The priority should be to make sure that AML CFT, so anti-money laundering and countering terrorism finance standards, are being enforced everywhere, including in decentralized finance. And when that is being done, maybe part of it will disappear because the value proposition will go when it's regulated. So we'll see what happens when the dust settles and when regulators come with a reasonable regulatory approach, and when that approach is enforced. I'm pretty sure that the landscape will be different. But that said, we are already seeing lots of interesting outcomes coming from this part of the financial world, and particularly, I would say, the use of programmability of smart contracts to streamline and automate a number of processes. That's something that everyone should be following very closely, because there is a potential to make the global financial system better.
Great. And let's move to the BIS Innovation Hub more into detail. As I said, this is a very unique experience. So could you please tell us what is and why it was set up at the BIS?
So the BIS Innovation Hub was created almost exactly 2 years ago. So we are a very young part of the BIS, and as many of you may know, the BIS itself was established in 1930. So it's now 91 years old, and we're only the last offspring in the BIS family. And the reason why the BIS board and the BIS general manager, Agustin Carstens, decided to launch the Innovation Hub is the recognition that technology is moving very fast. Technology is disrupting key central banking functions, and we need coordination. And there was no best place than the BIS to provide that coordination. So we've been created in a decentralized way to leverage the capability of our membership, and also to leverage the diversity of different fintech ecosystems. That is, you do have vibrant ecosystems in Hong Kong, in Singapore, in Switzerland, in London, and they are different. So you want to be able to tap the best skills and the best technologies everywhere. So we've been established as a hub in Basel with centers in different places. We today have 5 operating centers in Hong Kong, Singapore, Switzerland, London, and Stockholm. And in Stockholm, that's with a group of Nordic central banks, including Sweden, of course, but also Norway, Iceland, and Denmark. And in the course of next year, we will open centers in Europe, that is in Frankfurt and Paris, together with the Eurosystem, and in Toronto, Canada. And in addition, we do have a strategic partnership with the Federal Reserve Bank of New York. The Fed New York has created an innovation center, and we have a partnership with them to develop joint projects, exchange staff, and so on. So as you see, it's a decentralized structure. In each center, we have a small team partnering with the local central bank to build prototypes, proofs of concepts, projects in a consistent way across the hub. And then we are reporting back to the central banking community, and we are also building very strong relationships with private sector participants, because of course the technology itself is coming from the private sector.
What about academia? Are you also partnering with universities or other centers of research?
Yes, we are. Even though we are not a research center, and as you know, the BIS has a very strong economic department, and they are doing excellent research on technology. Most recently, they've been working on the role of big tech in finance. they've been, really setting the conceptual framework for the whole CBDC discussion, and that comes from the economic part of the BIS. But around our projects, we are also partnering with academics, and we are inviting academics as advisors on some of our projects. Yes.
Could you please tell us more about your main projects and initiatives?
So BIS governors have given us a number of priorities, so key strategic topics. Among them, of course, central bank digital currency, CBDC, but also open finance more generally. Particularly how to build open finance stacks based on digital identity, allowing free entry, using APIs, and that's another priority area for us. We are also working on next generation financial market infrastructures, including on traditional payments, but in with a particular cross-border angle to connecting fast payment systems. Hence, the project in Singapore I've already mentioned. The top priority for us is subtech and regtech. That is how to use technology to support banking supervision. We have, just to give you an example, we have a very, very nice project in Singapore called Ellipse, which is about streamlining the provision of data on mortgage exposures of Singapore banks to the Monetary Authority of Singapore, using a common data model at a high frequency, and then adding a layer of machine learning to create early warning indicators for the supervisors. So that the supervisor will have a dashboard, and in real time there will be this dashboard flashing red or green, depending on the evolution of the mortgage market. So that's really leveraging technology to make the life of bank supervisors easier. We also have green finance as an area of interest. We've just published a very cool project in Singapore, in Hong Kong, called Genesis, which is a green bond that we are issuing on a DLT platform, on a blockchain, with the ability to trace, to track the information coming from the underlying projects and bring the information in real time to the bondholder. So if you buy the bond, you have an app on your smartphone, and every night you can see how much electricity has been saved by the wind farm or the solar farm that was funded by the green bond. And in the next stage, we'll be working with the United Nations to connect it to the carbon credit market, to be able to make it possible to trade, to integrate the information with the market for carbon credits. So I'm just giving examples of what we can do, but we really want to show that technology can make a difference.
That's really fascinating. Suppose that in 2 or 3 years you are invited again to Cartagena Talks. That of course you will. What will you want to report in, let's say, 2025 as one of the greatest achievements of the BIS Innovation Hub?
So, I mean, first, I welcome very much the perspective, and I of course, I assume that this will be an in-person meeting in Cartagena, because that yes, will make it much nicer. So, thank you for inviting me. I guess the answer is we want to make a difference in the way central banks are using technology. So maybe one first answer is we want to be useful in the CBDC discussion. So when I'm back in Cartagena, say in 2025. I'd like central bank governors to tell me that, you know, they've made their decisions based on BIS Innovation Hub work, that we've been helpful for them to take their key decisions when it comes to CBDC technology. And we also want to show that technology can make a difference for green finance. I very much think that climate change is a key issue for our generation, and unfortunately also for the next generation, because that's going to stay. And we have a duty to show that technology can help. And the Innovation Hub very much wants to help.
What a vision, very challenging. I entered the Innovation Hub, Hub Internet site, and I was impressed by the number of initiatives led by you and your team. You have projects and strategic alliances worldwide, in particular in Asia, which is at the forefront of financial innovation together with some countries in Europe and the United States. In fact, thanks to technology, we saw you participate at the Singapore FinTech Festival yesterday.
Yes.
However, I was struck by the fact that Latin America is absent from your map. It doesn't appear in any of your initiatives. So I was wondering, is this a symptom that Latin America is lagging behind in the race of central bank financial innovation? What's your view?
No, of course not. I mean, of course, Latin America is not lagging, and the BIS has a very old and strong relationship with Latin American countries and with FLAR in particular, but not only. And we very much want to strengthen our links with Latin American countries. It's true that we don't have a center in Latin America, but the BIS has a regional office in Mexico City, as you know, which we can use also as a basis for outreach and cooperation. And in the course of 2022, we will open a center in Toronto, which is not in Latin America, I'm aware of that, but still in the right hemisphere and largely in the right time zone. So we very much also want to use the Toronto Center as a basis to strengthen cooperation with the Western Hemisphere generally, but particularly with Latin America. And we've just announced last week that the head of the BIS-IH Toronto Center will be Miguel Diaz, who's currently the Director General for Payments and Market Infrastructures at the Banco de Mexico. And he's very well known in the region and knows many of the key stakeholders in the region. So one of Miguel's many tasks will be to also build this network and make the Innovation Hub useful to advance projects in Latin America.
Well, hopefully this new experience is successful, and we'll see more of the hub's work also at the regional level. Let me move into the future of work based also in the BIS own experience. You have mentioned that the structure of the hub is very decentralized. So I was wondering, how was your experience working during the pandemic, and what changes do you see for the future for your own type of work?
Yeah, can I if you Fidel, would you allow me to maybe complement my answer on Latin America, and then I will move to your next
please,
question.
Go ahead.
Because I just wanted to give examples of our current cooperation with Latin American countries. We've created what we call the BIS Innovation Network, which covers all BIS membership. And so we have Argentina, Brazil, Colombia, Peru, and Mexico members of the Innovation Network. And also we have one of the key working groups of the BIS Innovation Network, the one working on open finance, is chaired by a colleague from the Central Bank of Brazil, Aristides Cavalcante Neto. And so these are places where we can reach out to Latin American countries. And we've also been working with the Banco de Mexico on our FX, high-frequency FX monitoring platform called Rio, based in the Swiss center, but that includes the Banco de Mexico as a key stakeholder. And we've been also discussing with the Central Bank of Brazil around connecting fast payment systems. So these are just examples of existing collaborations, even before we can move to the next step through the establishment of the new center in Toronto. Now, coming to your question, look, I think digital work is a mixed blessing. It has allowed us to work very effectively throughout the pandemic. When I joined I personally joined the BIS and the BIS Innovation Hub in January 2019, so that's nearly 2 years ago. I was number 3 on the payroll of the Innovation Hub. And we are now 35, and we're heading towards 70, 80. And so we've been able to hire people, onboard people, train people, and work on projects in a very building team spirit around projects, doing innovation design, design thinking, and so on, in a purely remote way and digital way. So that's great. But at the same time, you can't work with people without meeting them. And so I very much believe that in any organization, and the BIS is no exception, if you want to manage people, you need to meet them physically. And particularly in a very kind of dispersed structure like the Innovation Hub, where we have centers all around the world, it is absolutely key that the leadership of the management team can meet physically a number of times per year to regroup, exchange views, etc. And we've not been able to do that. So I very much look forward to the reopening of a number of airline connections and borders, so that we can finally regroup and prepare for the next steps.
No, very important. During this conference, it has said that remote work has increased productivity, at least at average level, but it has decreased the creativity factor, which I believe in the case of innovation hubs like yours is a critical component. So moving to a more hybrid world where you can have the best of the two trends, working remotely, but also collaborating physically, may be a winning proposition. And also, one of the most difficult challenges in establishing an innovation hub is identifying, attracting, and retaining talent with skills that are very different from those required in traditional central banking. Could you share your experiences with us, as well as your views on how this post-pandemic world will work for the future of attracting and retaining this type of new talent?
Well, I think it's a challenge for the public sector generally, and for the central banking community in particular, that we want to catch up on the private sector, and we are tapping a pool of talents which can be relatively narrow, and so people are difficult to find and they are expensive. And I think in a way the most difficult labor market is on cybersecurity. When you want to do red teaming and you want to find the right experts, they are all working for they're all in very high demand and very expensive. The way we've been addressing that in the Innovation Hub was to look at it globally. So we don't address the labor market for technology at a local level. Whenever we had to hire experts, our vacancy have been global vacancies. And so, for instance, we've hired DLT experts in Hong Kong and in Switzerland. They are great, and they were coming from the US. So if you want to overcome this labor market issue, you need to address it globally. But here the BIS is very well placed because we are a global organization, and so we can advertise for our jobs globally.
No, certainly. We have received a number of questions from our audience, so let me pick some of the most salient ones. Angel Arita from Honduras asks, which supranational entities should coordinate the joint work process of central banks to take advantage of technology? Typically, it only considers large central banks, not small economies or those facing greater challenges in terms of technology and knowledge adoption.
So yeah, indeed, there is a risk that international organizations would only talk to the big guys and leave the smaller countries, smaller jurisdictions out in the cold. That said, first, we've seen a lot of great innovation coming from smaller places. I mean, keep in mind that the first operating central bank digital currency came in the Bahamas. It wasn't in China, wasn't in the US, wasn't even in Brazil or in Argentina, it was in the Bahamas. So smaller central banks, smaller economies can be incredibly innovative. I mean, we've seen lots of fantastic projects in payments in smaller places in Latin America or in Africa. And I often say when I go to big conferences like G7 conferences, I always say that a reasonable objective for the G7 when it comes to payments is to catch up on Kenya, and we're not yet there. So I mean, technology innovation is a place where being small is an asset because you can be more agile and you can leapfrog over legacy technologies. That said, we know that we have to make an effort to reach out to a diversity of members, also beyond the BIS membership. Because the BIS membership has increased a lot in recent years, but it's still only 63 members. So we are not a universal organization like the IMF. We count a lot on collaboration with the IMF and with the World Bank also to reach out to a broader membership. We'll be talking to the IMF to see how we can join forces to achieve that.
Great. Jose Manuel Marquez from Spain asks, cooperation and avoid fragmentation is critical. We already have evidence of the role of the BIS Innovation Hub, but could you explain what is the role we could expect from a broader forum like the BIS Innovation Network?
Yeah, that's the BIS Innovation Network has been, I mean, is and will be an interesting experiment because we're trying to create a community where people can have the same culture and can exchange freely on innovation. We've set up a dedicated platform where people can chat, can exchange documents, can make presentations, and we're really trying to create a community here. With the caveat that it's only the 63 BIS members. And we know that we have to look beyond that, but still, it's a very nice way to connect people, have them compare notes on what they're doing, present their projects to each other, and also what we've been trying to do in the Innovation Network is to identify different answers to the same problem statements. Because central banks, after all, they do the same job, in different places, in very different environments, but it's always about monetary policy, it's always about financial stability. So the problem statements are relatively similar, but the answers can be very different. And it's incredibly useful to be able to compare different answers to the same questions. And that's what we want to achieve in the Innovation Network.
And Miguel Musa from Chile asks, given that the world is more dynamic and is probably will increase as time passes, do you think that innovation should become a core competence of central banks?
Well, it's a means to an end. It's a means to an end. I think the mandate remains price stability or monetary stability and financial stability, but we're in a world where you just can't achieve that. You can't deliver on that mandate without being at the frontier of technology, because the world around us is moving, and because because the instruments that you're using to deliver on your mandates risk becoming useless if you don't adapt them, if you don't upgrade them. So it's about upgrading our thinking and upgrading our instruments to keep doing what we've always done, which is being anchors of stability in our economies and in our financial systems. But if you want to keep doing it, you need to adapt and you need to invest in technology.
Well, thank you very much, Benoit, for your thoughtful remarks. We are running out of time, but I cannot imagine a better way of concluding our Cartagena Talks sessions with this discussion. During this conference, we have discussed the future of almost everything, except one very important topic, the future of football. So what is your view of Qatar 2022? Which countries will be in the final? And please use all your statistics and advanced analytics skills to predict the score in this final.
Well, yeah, you know, Fidel, my instinct is that the current world champion has to be in the final. And of course, I'm totally objective and non-biased here.
Against who? That's the question.
Well, if it can be a Latin American team, I would be very happy. But well, provided that the other one is France, you know, I'll be very happy.
Well, let's cross our fingers for that final. That'll be fantastic. Finally, in the same spirit, I would like to finish this amazing conversation with a ping pong game. I will give you one word or concept, and I will ask you to answer with the first word or concept that comes to your mind. For example, if I said football World Cup winner, you may want to answer Brazil, France in your case. So do you agree?
Yeah, let's go. Let's do the ping pong.
Okay, so let's begin. Pandemics.
Digitalization.
Economic recovery.
Uncertainty, unfortunately.
Global inflation.
Up.
Inequality.
Still with us, even though we could do much more, but unfortunately it remains with us.
Climate change.
Priority number one.
US dollar.
Will remain the dominant currency, like it or not.
Bitcoin.
Interesting experiment, but not a currency.
Digital renminbi.
Well, very advanced and a lot to learn from.
BIS.
A global force for coordination and I hope a global force for innovation.
Christine Lagarde.
Oh, you know, she's my former boss, and I enjoyed a lot working with her. She's fantastic. I've got huge respect for her.
Janet Yellen.
Same. She's not my former boss, but I also have huge respect for Janet. She's done a lot as Fed chair and now as minister.
Agustin Carstens.
He's changed the BIS and he will keep changing the BIS.
COP26.
Jury is still out.
COP27.
Well, an opportunity to do what COP26 won't have achieved because it's urgent.
Latin America.
Latin America. Lots of diversity in innovation, lots of vibrant innovation and fintech scene in Latin America.
FLAR.
Lots of thanks for inviting me today, and the best of luck for the future.
Well, thank you very much, Benoit, for this exchange. It has been a real honor and privilege to talk to you. We have learned a lot, and we're looking forward to seeing you and the BIS fostering more efficient, safe, and inclusive financial innovation in the world and in Latin America. Have a good day. Thanks so much, Benoit.
Thank you very much, and see you next time in Cartagena.
Sure will. So, after this fascinating conversation, I'll turn back to Iker for his concluding remarks.
Iker, you're on mute.
Okay, sorry. Yeah, I'm sorry. So many fascinating things, Benoit and Fidel, and yet so little time. It's been a pleasure having you in this final session, and to be honest, I couldn't think of a better way to end our event. Our conference looked at the most important secular trends affecting the global economy, markets, and society over the medium to long term, including topics such as technology and climate change, as well as geopolitics and post-pandemic recovery. We are grateful to all the world-class speakers who have shared their wisdom and insights with us over the last 2 weeks, and we are equally grateful to you, our audience, for making time in your very busy schedules to join us. Thank you again on behalf of FLAR, and we hope to see you at future editions of our events. So long, until then, and hasta la vista, amigos.
Thank you. Have a good day.
Thank you. Bye-bye.